Hello, geniuses, and welcome back to another episode of Genius Wednesdays. I am Christina Bruhan, joined here by the CoinGenius family and our head of market research, Mr. Stephen Quan. Steve, would you like to take the audience through our analysis this week? It's been quite a week with BTC over 11, links going nuts, and we have some updates on some correlations from the CoinGenius analytics side. Steve, would you like to take it away?
Sure, I will kind of give a 30,000-foot overview of things that I noticed, and I guess I'd let everyone else kind of expand since there's quite a few points and they're not all in my areas of expertise. But I guess the first in the blockchain space that seems to have gotten notice was the quick move to 12,000 in Bitcoin and the subsequent quick drop to about 11,000, whereas some of the derivatives or the leveraged products in ETH and BTC specifically did not act as one would expect. But I guess I can say from my days in Wall Street and market making and algorithms, if someone is running an algorithm on the 2 and 3 and 4 and 5x and keeping those in line, and all of a sudden that person just turns their wheels off, people sometimes take for granted that that person is there. And if they were to see something that would be advantageous to them to turn that off for a second or two, it's kind of like, well, I guess you know what I'm saying. But here, I'm just going to touch on that's my thought. I see Dave. Let me run over a couple other things. The Twitter hackers arrested. I think that's a big story. I don't think it really has much to do with crypto, although it was Bitcoin that was taken. I think the more scary part is that if you had comments coming out of President Obama or President Clinton or Bill Gates saying something like, we found the cure to coronavirus and we're giving $1 million in stimulus to something, algorithms would act on that, believe you me, and the ramifications of that could be terrible. Next up of, I guess, importance would be, I couldn't not mention gold and silver. I don't know if anyone follows this golden metal that people watch, but it is $2,040 per ounce. So that famed 2,000 level has been hit, and it's held it for now all of 2 days. What happens in the future? Don't know. Just I can tell you where. Also, it's what I guess some would call the younger brother, although it has very not limited characteristics, would be silver, and that's moved close to 27. Yesterday in the CoinGenius correlations, yesterday was really the first day that it had a slight breakdown, and I don't look at breakdowns as bad. I look at them as points where you should pay attention. Where you had equities slightly down, you had metals slightly up, you had Bitcoin, guess depending on what time you close it, relatively unchanged. So you had three major asset classes kind of that had moving pretty much in tandem, did not. So I'll let Christina or one of the data scientists expand on that, but I would simply make note of yesterday. They weren't huge moves, but it was the first breach. Now I myself, and with the help of some of the data scientists, am going to rewrite my version. I'm going to call it the Quan report. Some of you might have heard of Bitwise. I've read it a number of times. I think it was good for its time. It gave a lot of opinions, a lot of loose correlations, not a ton of data, and using terms like people tend to, or you can see that this is fake because, I don't know, I guess in my history, I couldn't go to a managing director and ask for an allocation and say, well, you can see this works because of this. They would need to see a little something more. And I guess the teaser, as Christina will call it, on what I'm looking at is it has nothing. The coin can be ranked number 5,000, number 5, number 1. It doesn't matter. It's simply looking at how many transactions are happening on their blockchain versus and using a dollar weighting mechanism to compare that to what is happening on CMC volume as well as CMC adjusted volume, which is more reputable. But I guess my test is going to see if I'm close, if I'm doing something wrong or not. I will tell you a story briefly. When I first heard of cryptocurrency, a friend of mine was starting one, and he's like, oh, you can buy this. So I went to Coinbase, bought some of this, exchanged it for Bitcoin, exchanged it for this, and just had it on the exchange. Well, lo and behold, the thing went up, and I had wild offers out against Bitcoin. And one day I thought my wallet got hacked because all my coins had gone, but all I had was Bitcoin in there. They're like, no, dude, your wallet didn't get hacked. Like it moonshot. I'm like, moonshot? That's when I heard the term when moon, dude. But that was an aberration, and it is probably not one of my finer moments, although it worked out because the exchange ended up closing and it was hard to actually get those coins in. I got extremely lucky, but I guess as, you know, speaking from someone who was probably in the minuscule piece of cryptocurrency there, I personally do not keep very much crypto on exchange. So when I see volume numbers, and I'll give a teaser on this one, the most true volume number over the past 30 days has been Dogecoin, where their CMC volume and their on-chain volume has been within 5% of each other. So what they're using it for, I don't know. Don't know, don't care. But somebody is using it to transact. Maybe they're doing spreads. Maybe they're buying. I don't know. Why guess? I'm just saying that is of the top 50 projects, that is the closest CMC to on-chain volume. The others I will divulge next week when they're all complete. And my last teaser is I was taking a ride out to the suburbs of Chicago, and I was with my son, and yes, I do believe in the Second Amendment, and we stopped and we saw this place. Literally, it looked like a small town, and it said guns and ammo. I'm like, all right, well, you want to take a look? Sure, Dad. Walk in there. I see that there's a 3% fee for credit card. I'm like, well, I got some cash. I mean, whatever. I'll buy a box of ammo, 15 bucks. I see this little tiny sticker right here. It says there's a Bitcoin symbol, an Ethereum symbol, a Litecoin symbol, and a Bitcoin Cash symbol. I'm like, you guys take all those? They're like, yeah, sure. I'm like, okay, cool. So bought $12 worth of ammunition, had about $15 of Litecoin on my Exodus wallet on my phone, put it up, showed him my Floyd card. He's like, all right, thank you. So I thought it was actually, I know, it's only 15 bucks, and yes, I do own some Litecoin. But I actually thought it was a pleasant surprise to see a store that I would not normally have thought was going to accept a cryptocurrency that did. And on the closing note of that, then I took my son for ice cream, and this was on Friday. And the ice cream store closes at 2:30 on Fridays due to COVID-19. I was thinking, wow, that tells me where their economy is during the week, because 2:30 isn't usually when most people get out of work. But on that note, I'll pass it back to the crowd. Christina, I know I kind of touched on a lot of things, but those are some of the things I noted. If anyone wants to expand on some of those.
Hey Steve,
Christina,
yeah, could I hop in with
yeah,
sort of like some of the global market stuff? So first of all, my heart and prayers go out to the people of Beirut after what happened yesterday. And if you look at where the market has been going for the past week, you know, the first thing to look at is let's look at the Forex markets. So there's a lot of speculation going on with what the value of the dollar will be. I mean, everyone had talked about, you know, we're going to see spikes in terms of food costs, and then we're going to see a crash of the dollar. We've seen the spikes in terms of food costs, and I'm going to give you my yardstick is I always use a gallon of milk and a gallon of gasoline. Because that's most of what America consumes. The other one is, you know, a box of diapers, but that price hasn't changed too much. but a half gallon of organic milk is now $8 in New York City. A gallon of milk is pushing, $4 in New York City. A gallon of gas up here is $4, whereas it's a lot cheaper a lot of other places. And so the first thing, and we'd seen this with the protests, and we'd seen this with the shift in policing. A lot of truckers are saying, from a logistics standpoint, if the city has defunded the police, they're not coming into that city. So you're already starting to see some breaks inside of the supply chains. Secondarily, we've seen increases in prices across the board for foodstuffs. Thirdly, we've seen a lot of Forex activity, which is basically hedging. There's hedging with the euro right now, there's hedging with the dollar, and there's hedging with a number of the Asian currencies. The RMB is likely to take a reputational hit shortly because Japan has basically said to 87 countries, hey, you want to pull your supply, or 87 companies, you want to pull your supply chain out of China, we're going to help facilitate do that. So the global market shifts that we were talking about a couple months ago on this podcast have already started to matriculate. Now, parallel path to that, what's really kind of interesting is, and just echoing Steve Quan, we've seen the mooning, or moon-ish, I would say halfway to the moon of Bitcoin. But what we are seeing is some interesting variations in terms of alts, right? There's a lot of alt volatility that's going on, but there's a lot of alts that are popping up, VeChain notably, Link, a few others, where there's a significant amount of arbitrage worth to be gained. And there's I think new entrants that are coming into the market right now. The word DeFi is being pumped by every single crypto person on Twitter. They're like, what, you don't know about DeFi? You need to Google DeFi. Take a look at DeFi, And I think the challenge that you have is that most people still don't understand what this is. We're going to be, again, we're working on a pilot with CryptoLina, and I'm doing some advisory. But a lot of this is like, how do we get the have-nots into this? And how do we get the crypto Luddites into this? Because in many ways, this is, the early 1900s. We're taking people from gold and silver coins and putting them on the dollar. Well, here we're taking them off of the dollar, and we're putting them back into variegated currencies that have many, many different use cases. If Steve Quan can spend Litecoin or Bitcoin Cash or Bitcoin SV, or even Doge, on bullets. If you can crowdfund and you can crowdsource people in Doge right now, there's these new utilities that are coming up. And I think from the total arbitrage perspective of market entrants, the top 1,000 cryptos are really the ones that are probably going to pop up. And we're looking at, the best use cases and the best projects that are out there. But again, everything that we have talked about is now coming home to roost. JP, I want to turn this over to you a little bit because I see you nodding a lot here. But from the market entrant perspective, from the ATM perspective, from people getting on these things perspective, you've got your ATMs with the cards. Fred Krueger just launched the metal hard wallet, which basically looks like a credit card. We've got our friend Kyle Kemper with SwissKey, who's still pushing SwissKey, but he's got a couple of pilots that he needs to get out there. And then we've got a lot of new utility in the market in terms of allowing people to onboard simpler. And so from that perspective, I just want to throw a couple of predictions out here. One is we're going to continue to see volatility in Bitcoin with market volatility for the next couple of weeks. And the Beirut bombing, which I'm calling it that right now because there's a lot of indicative factors that they used an aerosolized accelerant to fire that stuff. Ammonium nitrate sitting for 6 years is typically wet. Okay, it's not going to fire real easy. So, and you need a catalyst for that. And then secondarily, this is, if you look historically at America, we've had grain explosions that have taken out entire cities, but you have to go back almost 80 years to see these kinds of things. So it's relatively similar in terms of what's happened there. And it's similar in terms of the use case of like how that stuff was stored in a port, stored improperly. But there's a lot of questions that are going to stem for that. The philanthropic efforts, I think, from a lot of countries, including the United States, Secretary Pompeo had made overtures yesterday, whatever they need, we got. are going to happen pretty quickly. And there are questions. There's questions in terms of what can be done in terms of crypto financing. There's questions in terms of what are the long-term impacts of this going to be? Because guess what? They also found similar fertilizer situations in England. So there's some very strange things afoot that are going to play into the markets, very much where, you know, we've had wartime strategies previously, excuse me, that are above and beyond what Stephen has spoken to. But I think, you know, JP, if you and Josh could kind of get into it, I think from looking at the market variances and looking at the utility cases, there's some real new stuff happening.
Well, I'm with you, Oz, and our hearts do go out to the people of Beirut, and we hope that this is just not the beginning, that it will be something that was a fluke, but we all kind of know better, and I guess we're going to see what's coming. But as I've always said, and always do say, is that history leaves clues, and so does success. Success will leave clues for you if you just are apt to watch what the clues are. I think that, you know, Steve, both of you guys hit on something really cool, is that Steve used Litecoin to buy ammunition. That just shows you that the adoption is coming, and that is a clue for those of you that don't know. And then Oz, you know, you're talking about using the USD dollar to buy a gallon of milk that's $9. Well, how about Venezuela when their dollar started collapsing and they had to use 2 stacks of money to buy a cup of coffee? And, you know, you see this, what's happening, and I don't want to be against the dollar, but let's think about it. Is it devaluating? What's going on with that, and how are we going to adopt to it? And then you start looking at the banks and the big foundational money and the big guys coming in that are coming into crypto with billions, not millions of dollars, gentlemen and ladies and gentlemen, but billions of dollars that's being diverted into cryptocurrency, and how they're adopting to it, and what's going on. So, you know, we have 190 million just recently, and so on and so forth. So, you know, they're bringing this to us, and if you don't get the clue, you're going to be left out, you know. And it's kind of like right now, everybody, you know, probably has an email. You know, when I was around when emails first came out, and I remember people telling me, no, I don't want none of that. And there's no way it'll take control of the postal service or take over. Emails, that's just a fad. But you got to keep in mind, I used to own 10 fitness centers, and I heard the same thing when I opened my first fitness center, is that it's exercise. That's just a fad. And I said, yeah, well, tell that to Jack O'Lane. Now I'm really setting myself back up. But, you know, Jack O'Lane was my hero back then with his German Shepherd on the TV. I used to watch that. And everybody said, it's just a fad. There's no way. And now you look at today. You have to look at the way things were adopted, you know, and when they push you off. Now we have Visa coming into play. We have all of these companies, these big companies that are finally saying, you know what, if we can't beat them, we better join them. And if you don't change, if they don't start changing their business model, especially the banks, and they are, if you watch, they're doing digital now. You can do a digital account, and you can do, you know, they're printing digital money, as they call it. You know, all of this stuff that's coming in, you got to watch. And, you know, let me spit this disclaimer out for all of us here. None of us are financial advisors. We're not giving you financial advice. We're not telling you what you should or shouldn't do. You should do your own due diligence. Find a financial advisor that's crypto savvy, that knows what they're doing, and take their advice if you please. But always do it on your own. Don't do it because someone else says to do it, please. Other than that, you know, we talked about the Twitter hack, you know, for a second there, Steve, and that was pretty cool. Those guys, 17-year-old gets arrested, 30 different felony charges, 17 years old, hacked. Come on, these young people are the brains of what's going on out there. I'm just a guy that's just watching all this cool stuff happen, and I like to try and help those guys that are put their focus in the right direction and become white hats and not black hats. But the other thing we want to talk about real quick is why did we see such a drop from 11 to 12? That was from 12 to 11, excuse me. The drop happened like that. And a big part of that was, I believe, was the glitch that started in Binance. A single user had placed several large orders in futures over a short period of time. which created an insane candle wick, 99,964. The whole thing was triggered. It triggered other outages. It was a trigger that triggered other outages at other exchanges and glitches. And therefore, I think that's what happened. Over $1 billion was liquidated, by the way. That was the last number. So that could have a little bit to deal with why we went from 12 to 11 that fast. We're on our way back up, obviously. We got to break that 12 again to that breakthrough. If we got a little resistance there. But we'll see what happens. You know, we're all hopeful. And also, you'll see when notoriously or history-wise, when Bitcoin is going down and also start going up, you'll see that teeter-totter happening quite a bit with the altcoins and against Bitcoin. People shift from buying or they cash their Bitcoin and then start buying the alts when Bitcoin's a little high. So you'll see that actually happen too.
I would love to talk about the 12,000 to 11,000.
Okay.
Because it's pretty. Occam's razor tells me that what I'm about to say is what happened. I have no direct proof, but my dad always told me follow the money. So here are the facts. Facts are simple. Funding rates on all the perpetual and futures exchanges were off the freaking charts for the last week as it moved towards 11,000 in its slow, steady grind. That means there was a ton of demand on the long side, but it also means that if someone wanted to do what I'm about to suggest, they would have been able to do so incredibly profitably. So what happens when the funding rates go to the long side? It means that somebody can go long and buy in the spot market Bitcoin and sell perpetuals against that and fund it very profitably. You could amass a huge position. $1 billion position would not be too hard to do. So now, if you did, let's imagine our intrepid adventurer decided this is a really cool thing. I'm going to put on a $500 million or a couple $100 million position of spot Bitcoin, hedged against futures perfectly, and I can actually make money at it. Now, let's say I want to make even more money. What's the best thing I can do? Well, let's see. I could sell my spot coins really stupidly across exchanges and pound the price down. When I do this, I will place limit orders to buy back my futures way below the market because I know that all the futures exchanges have $1 billion of leverage that's built up over the last couple of weeks from all these people who are paying this funding rate. So if I do it, I'm going to sell spot at, let's say, an average of, I don't know, 11.5 on my way from 12,000 down to 11,000, but I'm going to buy my cover at 11,000 or below. Now, if I want to do this and I want to maximize my profit, when am I going to do it? Well, let's see. What's the least liquid time of the night, of the week? It happens to be Saturday in the wee hours of the morning, New York time, when it's still Saturday and the people in Asia aren't there and all the people in Europe are all also asleep or just barely waking up, or maybe they're catching their morning coffee. It is the least liquid time. Well, considering that, I look at this and say, well, let's see. Funding rates were really high. The selling cascade started in the spot market, regardless of what you said with Binance futures. Multiple people have told me they think it was spot-led. And the cascade happened because of all this forced liquidation. And let's see, what was the time of day? Oh, yeah, it was the least liquid time of the week. So my opinion, no proof, total speculation, is that somebody made a shit ton of money driving the price down by covering their futures way lower and selling out of their position. As a result, what do we learn from this? Well, we know a few things. The first thing we know is that if you did this, it's illegal to do this in every commodity market, the CFTC, the FCA, ESMA, the Hong Kong authority, the Japanese authorities. If you did this in FX, if you did this in FX, spot versus futures and government bonds, sovereign debt, equities, doesn't matter. In any other market you did this, it would be considered manipulation, and they'd be giving you the orange jumpsuit treatment if they caught you. In crypto, the thought process is it's not illegal. I think in the next 7 years, the people who did it, if in fact I'm right, will likely be found because they'll be stupid enough to brag to somebody And they'll probably find out that yeah, well, you know what, it's a commodity, and regulators don't like this stuff when it happens in commodities. And frankly, for the rest of us, I think it can't happen fast enough, because it's the kind of thing that hurts. So this is what I thought happened. It's possible I'm wrong, but I'd be willing. I'm at a higher level of confidence than you are about Link.
Aha, almost impossible. However, I will tell you that if you're right, it's absolutely illegal under the Commodity Exchange Act. The definition of commodity for that regulation is pretty much everything under the sun. No, scratch that, it's everything in the universe. So it would be covered for, Section 6 of the Act that has to deal with the fraud aspect of it, and also the futures contracts would be considered swaps.
I hear you. The only reason I was mentioning it that way is because most of the leverage was outside of the U.S. on the perpetual exchanges.
Sure, understood. If it's outside the U.S., it's outside the U.S., and my knowledge really goes right down the drain on commodities outside the U.S.
The point about this and why it's important is that when you see a period of time when the market's climbing a wall of order, you might remember a week ago I said 12,000 was baked in the cake. I was right, but not for very long. Although I still think I'm right, and I still think we're going to go back above it. But the fact is that there is real demand, and there's go-along speculators. And the go-along speculators all got flushed out last Saturday, and so now they're reestablishing their positions, but they don't have nearly as much time. And so that's why it's less likely the second time will be, the second time is more likely to be the charm, as it were. The point about all this is that there's a reason institutions worry about this market. It's because of this sort of behavior. There's also a reason that retail worries about this in terms of, where do I place my stop orders? What do I do? I mean, look at this stuff. It's obviously bullshit. And I know I probably shouldn't use that word, but it is. I mean, that's the only way to describe when this stuff goes on. The truth is that, it is something, it is a feature of a market like this right now that's 24/7 and global. And it's just something we all have to know about. It can happen, and it does happen. Unfortunately, we won't go another 6 months before something like this happens again. It may look different, but it could be on the upside, the downside, it doesn't matter. My point is that people who aren't aware, as Steve likes to talk about, the interconnection between derivative markets and spot markets, have a huge freaking disadvantage. And so when Steve is talking about the connection of derivative markets, that's why I was nodding my head so violently, Steve, because that's exactly the point, right? It's like, look, it's entirely possible I'm wrong. And it's circumstantial evidence, as it were. But everyone I've talked to about this who feels the way I do, well, every person I've talked to about this, when I talk about my theory, everyone nods and says, of course, that's what happened. I mean, I haven't not gotten one person that says, oh, that doesn't make sense.
Yeah, I'll go with you on Occam's razor on that one. I agree.
That's right.
I'll also say I was almost certainly going to talk about Bitcoin ATMs being a fad, but then JP came out with a disclaimer immediately after that and warmed the cockles of my heart. So Bitcoin ATMs are not a fad. Here to stay.
Thank you.
You're welcome. Thank you. And also, this
especially
is
for the unbanked right now. I mean, come on. And hey, I've got some really cool news. In 8 weeks, Cryptomatic ATM has partnered with I'm not going to say who yet, but with a cryptocurrency debit card that you will be able to get at the ATM machine. It will actually dispense a card that you can load with your crypto and spend it anywhere in the world that the Visa, MasterCard, or Union Pay is accepted. So good news coming out. That's really cool. So even if you don't, even society, Cryptomatic is still staying ahead of the game for everybody. So
fair enough. So I want to talk about altcoins
awesome.
For a sec, and comments on a few of the things that have happened that have been reflected in the market. And again, I look at this very much not from a trading perspective. I know very little about trading and technicals. I'm one of those people that the connection between the derivative and the spot market, not really in my brain, unfortunately. I'm handicapped there. However, what I do know is use cases. And here's a few things that have happened in some of the different altcoins that have gone up. So for Link, Link has been fast and furious announcing partnerships with very established enterprises and governments. In fact, I forget which state they hooked up with, it might have been Colorado. but they're just on the announcement bandwagon in terms of their use case adoption, which is they announced Google I think a year ago, so it's not entirely new, but it's moving fast and furious. They also just announced a ecosystem fund to foster their community in terms of creating data nodes, which I've mentioned to Jeremy and Christina, they really should get on top of becoming a link node because there's a lot of money to be made there right now. But the other things that's going on, Stephen mentioned VeChain. I'm fortunate that VeChain is one of our firm's clients, so I know them pretty well. Without saying anything that's confidential, they are also at the point where they are establishing their enterprise partnerships. And that's what's driving the use case. VeChain's got a defined use case in IoT and supply chain, and it's starting to get traction. So there's that. There's some other stuff I can't mention that maybe got out also, but that's one piece of it. In Cardano and Ether and Tezos, you've got 3 platform cryptocurrencies that have all either released new updates to their platform that have gone well, or in the case of Tezos, have just made some announcements in terms of how their platform's performing. And that's kind of driven some things up. And if you look at, your top 15 or so, Stellar I know is doing the same thing, though I don't follow it closely. You can see how that's working. And meanwhile, there's one extremely glaring one of these things is not like the others in the top 15 coins, and that's EOS. EOS is a hot mess. Forgive me, and I'm not dialed in as an insider into EOS at all. So if anybody is and they know differently, then I'm the idiot. But at least the perception is that EOS is a hot mess. And you're watching EOS drop out of the top 10. It's dropped, and it wouldn't surprise me if it continued to drop. So, again, I guess none of this is legally oriented other than to say that, very much like the stock market, yes, there's technicals, but there's also the question of an analysis of what is a business actually doing, what are its prospects. And, you're starting to see that in these assets, even though these assets are clearly not stock and not debt. It's a new class, but it definitely has a lot to do, particularly from a long-term trading or perspective, with just what is the use case. So that's my use case pitch for this week. I'm sure I'll make one again next week.
I have a question for the crowd.
Just real quick, let me jump in real quick on that. Josh, if you think about it, if all of us had this crystal ball that we could see into the future and see who's going to start adapting or adopting those cryptos, what happens when PayPal and Venmo adopts Ethereum? Just in case, what happens to these cryptocurrencies that start getting adopted by these foundations?
Right.
Institutional money. What's going to happen to them? And when the ones that have the best use case, those are the ones they're going to look to first. Wouldn't you agree? I'd
like to agree. Okay, I think I'd like to think that that's at least 3/4 of it, and the other quarter of it is perception. Anybody who's adopting, forgive me guys for saying this, but anybody who's adopting Bitcoin right now and integrating it into a platform is doing it on perception because the thing does not work for its use case. And as far as store of value, digital gold goes, everything is a store of value. So I'm not really buying that one either. What it has, it's got great perception. I can't call it a great trademark because there's no organization to have a trademark, but it's got great perception out there, and that's what drives it, which is different than most other things. That said, JP, the question in my mind is really, what is the nature of the adoption? How's that going to work? If PayPal were to adopt Ethereum right now, and I don't know that they are, I think they may be adopting an Ethereum clone that they're putting together that they can control a little bit more. But if they were to adopt Ethereum, I think they would probably crash the Ethereum platform very much the way CryptoKitties did if it got any real usage. Now, Ether 2.0 is just released. I think it was just released. If it's not, it's going to be any day now. The reviews I hear on it are pretty awesome, but again, that's perception, so I don't know. If they can get their transactions per second up and the gas price down, then, that's great. I'm not a huge Ether fan, notwithstanding the fact that it went up about 100% since 2 weeks ago when Jeremy was saying he was a buyer under 200, never went under 200 again. I was watching. But that said, that's because of the technology. I tend to think of Ethereum as, it was the second real player to the market. It was the first platform for smart contracts to the market. Unfortunately, it's legacy technology, and anything that comes out now is actually something totally new that's just branded as Ether. So, we'll see what it is. Visa adopting anything, I think a lot of these places, they're adopting closed systems. And one of the things I wanted to get back to actually in terms of the adoption, I forget whether it was Stephen or Oz who was mentioning it, but yes, there's adoption of blockchain happening, but there's not necessarily evolution of business models. There's a lot of protectionism over the current revenue streams for some of these larger institutions. And, they're smart enough to recognize that they can't ignore the technology, but it doesn't mean that they're trying to adopt it in a way that's efficient and that's going to, really benefit anybody other than, the industry. And they've got P&Ls they have to report. They're public companies. So, I still personally look towards the public chains and, those types of entities rather than, JP Morgan's Corda and, IBM putting Hyperledger everywhere. As places where we're likely to see some real evolution in terms of how people see things every day. And the last thing I'll mention, because I've been focusing on it on a project I've been working on, is David, you mentioned the fact that this is what you get when you've got a global market. And I think that that's right. Write it down, my 10-year prediction is that we're going to have most securities trading globally. And you're going to see kind of the segregation, if you will, of every country's markets really start to fade. And the countries will hate that, the regulators will hate it. And quite honestly, it's probably a horrible thing just in general for society. But I don't think you can stop the technology. And I know the stuff that I'm playing around with, and it's just too easy to turn digital assets into things that can kind of morph to cover multiple regulatory schemes. That's kind of what I'm focusing on right now. And that allows for, much wider trading and distribution and arbitrage and everything else. And I don't know what we're going to do about that because, trying to get the world to agree on what the standards are going to be and to collaborate in catching somebody who does something like what you proposed just happened. That I don't have an answer for. That's all I have to say about
funny.
that.
I have often said, I make the same exact prediction, but I say 20 to 25 years. And the reason is because of what you said, which is the incredible vested interests that are in each individual, not just the country, but all the firms. The reality is, if you want to trade, if you're in any country outside the United States and you want to buy a U.S. tech company that you heard of, a smaller cap one, good luck. It's incredibly expensive. People, even where there are, whatever. If you want to buy a non-U.S. company, you have to go get what's called an American depository receipt. Most of those have enormous implied spreads, and the big banks, the Citigroup and Bank of New York, make it's a $10 billion a year business, just capitalizing on the inefficiencies, and that doesn't even count the so-called gray market stocks, which are 17,000 or so global equities that you can't buy that way, and you pay market makers, 5, 6, 10%. It's very expensive. Those inefficiencies will go away because tech will drive their way. I actually think it's a good thing, not a bad thing. The issues will be the ones in how things get hammered out along the regulatory side. And I agree. I just think that's going to take a lot longer than people think. And you're going to see weaponized compliance on behalf to protect the turf of the big firms for years. It's nothing new. It's crony capitalism. We could talk about it. I'm sure most of the people on this call
I'll give you a giant example. Giant example is custody. Custody is the biggest example of weaponized regulation to protect the vested interests. I think I read a stat, something like 3/4 of State Street's revenue is based on custody, and they're holding something like $68 trillion worth of securities in the proverbial basement. And, you don't need custody on a public blockchain because, everybody's there. Now, some people need custody because they're idiots and can't keep private keys, and that's a different kind of thing. But the custody that these guys are making a lot of money on are things like ETFs and funds, and everybody else who's got to have things in a regulated custody spot. I've been talking with NASDAQ quite a bit, and one of the things that they've been very clear about for me is that any digital asset that's going to break into the retail market needs to be custodiable, because all of their member entities, all of the street name entities, aren't going to deal in anything that's not custodiable. Now, as it happens, digital assets can, in fact, be put into custodial accounts, and they're figuring out how to do that. And there's procedures and all this other kind of stuff. So that's not going to be an end of progress, but it's definitely going to continue to be an unnecessary profit point for a long, long time. So agree with David entirely.
Thanks, Josh. I see that Jeremy Bourne has joined us, and we have some updates on the CoinGenius analytics, our VIX correlation, but Jeremy is much more articulate. So if he could take the microphone, that'd be great.
Absolutely not. That's all you, no, I'm kidding. All right, let's see here. Yeah, all right, you can see my face. There we go. The Doge in the background. The only true crypto, according to Steve Quan here. So I have to comment first and foremost on the Ethereum stuff that's spewing out of Josh Lawler's mouth. Really what it comes down to, Josh, is how I look at it is, yes, I did say as loud as I could. It's a really good deal to get into Ethereum under 200 in any capacity. Luckily, I was right, but I will say that I've been wrong on a heck of a lot of those calls as well. So just as many as I've made right, I've been wrong.
You're supposed to forget those, though, Jeremy.
We're supposed to forget those and just only hone in on the ones we're right.
Let those just fade into the obscurity, fade into the dog, fade into the Doge.
My argument is tangential to some of the things that you say about, Link and some of this, these DeFi products, which is a lot of people just don't realize that DeFi is built on top of Ethereum, right? And inherently, it doesn't matter if there's a direct one-to-one correlation. Inherently, in the same way that I truly believe that if Ripple Labs ever goes public, XRP, as a result, is going to shoot through the roof, at least momentarily, before it drops and goes to zero. And that's just what's going to happen. So I think people are starting to really understand, especially the speculators out there that are buying the links and buying, I don't know if you guys know Band, B-A-N-D. Band is a competitor directly to Link. And that already, I think, is at like $5.50. I mean, it's crazy to think. So I'm doing significant research into Link competitors, especially with this whole Zeus Capital thing. There's a lot of interest in DeFi specific products, not to mention that of the fact that NFTs, which I think, just crossed the $200 million mark in terms of revenue generated by NFTs in the digital collectible market. That is a burgeoning industry, and I think that's going to hit $1 trillion very soon. I'm already speaking with athletes. I'm speaking with artists, famous artists that just have no idea how to create ongoing revenue streams through these smart contract protocols where they get an authorship fee on every sale in perpetuity. Guess what? A lot of that is built on Ethereum, and most of these platforms take Ethereum to purchase that. So you're talking about network activity that's going through the roof. So all of these things built on top of Ethereum or utilizing ETH are undeniable, and they're moving very quick. So regardless of what you think of the underlying protocol itself, I think that it's a long-term winner, but it's a slow and steady growth winner versus something.
Jeremy, what keeps those NFTs? Like, NFTs are going to be massive. I think anybody with two brain cells that are not fighting each other at this point can see where that's going.
Yeah.
But what makes you think that that's going to stay on the ETH platform? Because it really doesn't need to. They're so easy to code that what's the thinking there? Why them, not Tezos? Why them and not Cardano? Why them and not any number of other platforms that can serve that purpose?
80-20 rule, right? 80% of all liquidity is held within the top few assets, and ETH happens to be one of those. So because people are holding mostly ETH in their wallets, it's just ease of use. If somebody gives you an option to spend ETH or NEO, what are you going to pick? You're going to pick ETH, right? So I think it's really, at least for now.
Unless I'm buying ammunition.
Yeah, exactly. I mean, you look at Nifty Gateway.
Can I hop in here?
Oh, sure, go ahead.
Sorry. So two things I want to point out. NFTs, if we go back to CryptoKitties, were at peak, an entire set of CryptoKitties could be worth 1.4 million. on the ETH network was indicative of a start. But just look, between CoinGenius and myself, we're being released on Wax in 3 days on the Blockchain Heroes set. Okay, and I think if Kyle Rayo is here, he'd concur with me that what we're looking at is we're looking at a massive shift in terms of the divestment in between crypto and NFTs. NFTs are literally going to become like the tops trading card market. If you look at the Quid platform, QUIDD, that's where we've got a lot of, again, non-blockchain connected NFTs that are purchasable with, you know, points that you basically spend money for. But they've got intrinsic value to them, and the value of these things is increasing significantly over the course of time. And that's a use case that I think the traditionalists from, you know, the perspective of collectibles are going to hop in. The flip side of this too is that, you know, Fred Krueger, a bunch of other folks are talking about platforms. Travis Wright from the Bad Crypto podcast is working with Elise Sam in order to, you know, try and get those things out for concerts, for any kind of event where the ticketing process itself is kind of boring or banal and can be utilized in a different way. So I think Ethereum is definitely going to have and continue to play a role. But a lot of what this is going to come down to from the collectible market perspective is what is ease of use, what is ease of access, what is the utility cost for people to get involved with this quickly, and, you know, what's the opportunity to scale. And if we look at some of the Wax NFTs previously, if we look at the Garbage Pail Kids, okay, which was released on Wax, those things went through the roof in terms of price and accessibility in a very short period of time.
27 hours sold out in the first version, right? Yeah. 1 hour sold out in the second version, and then William Shatner's just sold out in 9 minutes. So I mean, increasing.
So that's really my perspective is that when you look at collectibles, you have to think that as opposed to traditional crypto, this is a market where people can get involved very quickly. They just have to figure out how to hold these things. Now, the challenge to a point that you guys have all articulated is there is no uniform crypto wallet.
So cute.
Audrey, guys. There's no uniform crypto wallet for all of these things. So, you know, and I'm trying to get her into crypto collectibles.
Nice.
So
tell her to download the Disney app.
Yeah.
Put on by Tops. They have a really cool app. My daughters love it.
I would also point you to, you know, another one of our clients, which has the Chiliz token, which is, you know, primarily coming out of Europe from a securities law perspective. They had to do that, although it's now used in the US now also. And their kind of pitch model is radical fan engagement. They do deals with various sports teams. They've done a deal with UFC to create, you know, different types of tokens that are limited edition, some non-fungible, but some are just, you know, tokens that will allow you to vote on things like a team's uniform or fight song, or, you know, might be, you know, something that's a collectible about a particular UFC fighter or what have you. Now, they've developed their own app called Socios. It's available on, you know, either app store. And that app is the wallet. And that's how they've kind of gotten into it. So they've got, you know, the Chiliz token, which is basically the medium of exchange within that wallet. And then you can use that to buy and sell the various types of fan tokens, which I believe shortly you may be able to take out of that wallet and put somewhere else, although there's some regulatory hurdles to that.
Yeah. So look, how I see this is
everyone here is.
Oh, go ahead.
Sorry, I just want to add. Everyone, and I'll just flip back to you. Everyone here is old enough to remember opening packs of stickers and putting them into a trading book. Okay, and in largesse, that's what you're doing with these things. But the cool factor is not only it's not that like you're putting in the trading book and you're like, look, I got the full trading book. You can actually utilize your full sets, trade, sell your full sets. Like the commerce utility of this is something we didn't have generationally as 80s kids, but as you know, the teens kids and the 20s kids, they're going to have all of this. They're going to have this utility. So there's some significant opportunities to just think about this. Okay, it's all going to go in waves. Like you're going to have everyone from like 6 to maybe about 30 who can jump into the NFT side. You have the crypto arbitrage side, which we have to be careful with because you look at Robinhood, and Robinhood I personally think is a garbage platform in terms of crypto accessibility, because they hold it for about they hold your stuff for about 3 days. And a lot of people are realizing this. And then I also really want to point out that Robinhood facilitated the suicide of a 20-year-old kid by not, it's people getting into these markets, options trading, these other things. They need to have a little bit more education. There needs to be a little bit more gatekeeping with this, with our youth, and there isn't. And these companies are not affording that. But we literally could have multiple waves of this coming very quickly from different age categories and even different ethnic groups that just hop on because like something is cool, something is fresh.
Right. You just, again,
Josh, let me just chime in here. Sorry, because I know we have to wrap up.
Yep.
The last thing that I really want to say really around NFTs and how we're seeing it evolve. I got off the phone with Duncan Cockfoster of Nifty Gateway. And if you guys don't know who he is, Nifty Gateway is already kind of transcending, the compatibility between ETH and buying NFTs with ETH, and kind of transcending that in the sense that they accept credit cards, right? So they act almost as a purchasing agent, use your credit card. They do the purchasing for you. So it doesn't matter what blockchain it's on, they'll go purchase it. And the cool thing is that the Winklevoss twins of Gemini purchased that company specifically, and they did it because they have one of the most highly securitized and sophisticated custody solutions. And they're using that custody solution from Gemini to be able to hold those assets. So it's really interesting to see how that's going. And now that's opened up a whole new world of people of digital collectibles. He told me that 70% of all people that purchase on their platform have never purchased on any other platform. They've only purchased NFTs there, and it's because it's easy. It's a credit card. That's the future. And guess what? The wallet, you just go to your profile and it just shows your NFTs. There's no wallet. And it allows you to transfer them. It allows you to sell them. Right?
Your wallet will be your Facebook profile before too long.
That's what it is. And guess what? Taking it a step further, they've created, basically they look like TV screens, and you had them in the background. These screens, these projectors that are tied to your wallet on Nifty Gateway, so you can actually in your home, he's displaying his artwork everywhere. Has a QR code in the bottom. You scan it, and it shows you exactly what number he has out of the whole lot of those specifically tied to blockchain. So anyway, that's my final thought, but that's where it's going, and it's pretty impressive to see how quickly it's evolving.
Awesome.
Cool.
Well, I'm going to actually expand on that. And this is kind of piggybacking on the conversation that Josh Lawler and I had at our networking event last night, which is NFTs are way bigger than just collectibles. You'll see them as proof of completion. You'll see them as starting to kind of like stand in for unique experiences. And what Bill Gates is talking about, proof of vaccine and proof of recovery and all of those things becomes tied to your digital identity and your digital wallet. So I see this as an explosive, exponential thing that's going to just absolutely reshape the world as we know it in the next 10 years. And CoinGenius is certainly pushing forward with our own NFT solution through CoinGenius University, just as a teeny tiny little plug there. So there's a lot happening that's way beyond just collectibles. So on that note, we have to wrap up for today. We're out of time, but thank you everyone for joining us here for Genius Wednesdays, and we will see you all again next week.
Excellent.
Thank you, everybody. And happy birthday, Christina. Thank you very much.
Happy birthday.
Happy birthday, Christina.
Happy birthday, Christina.
Thanks,
Happy
guys.
birthday, Christina.